Gold has slumped below key support levels this morning, hitting its lowest since July 2010 after the dollar rallied further on news that Japan will aggressively expand its stimulus measures. Spot gold hit a low of $1,162 per ounce, down nearly $38 at one stage, with the metal looking susceptible to dropping even further. Silver also followed gold lower, breaking key support at $16 to bottom out at around $15.76, though it was last at $15.90, still down 60 cents for the day. In an unexpected move, the Bank of Japan's policy board voted to expand the pace of its quantitative easing, sending Tokyo stocks surging and the yen sharply lower against the dollar. The central bank will increase the monetary base at an annual pace of 80 trillion yen per year, above its previous target of 60 to 70 trillion yen per year. The dollar has, as a result, rallied against the euro, having already been bolstered by hawkish US Fed comments earlier this week regarding its economy. The US Federal Reserve, as expected, will conclude its asset purchase program this month. The debate, however, now turns to when it will raise interest rates, which have been near zero since December 2008. The physical market is now key to the recovery, but with the Indian festival season winding down this week, a near-term catalyst for physical buying looks unlikely. Investors will instead be looking to China, the world's largest consumer last year, to provide take-up on the cheaper gold price. It has been a busy week for the gold market, with many starting to believe that the near-term outlook on the metal was starting to improve, on improved physical demand, weakness in the dollar, and the Swiss referendum on gold next month. In what many believe is a sign of a potential bull run in the making, the go-through rate slipped into backwardation on the 1 and 2 month forward rate, though the rest remain within the usual trends. We also learned this week that Societe Generale has become the second rate setter this year to exit the go-through rate setting process, with participants now at the LBMA's minimum level of 6. Elsewhere, data today was heavier. German retail sales and French consumer spending both undershot, while the EU CPI flash estimate was, as expected, at 0.4%. In the States, the US has just announced personal spending and personal income figures, which both came in under forecast, while the employment cost index improved. Meanwhile, the weekend will see the Chinese manufacturing PMI data, which will be key for sentiment into a fresh week and a fresh month, especially after hitting the levels that gold has hit today. In other precious metals, platinum is down around $16 to $1,226 per ounce, while palladium is up $2 to $783. Sentiment in white metals may improve in the coming weeks on news that South African power producer Eskom is struggling to maintain output owing to problems at several of its stations, which could restrict operations at a number of the country's PGM producers. This is Ian Walker reporting for the Bullion Desk down here at the London Metal Exchange.